Okay, hopefully everybody can hear me now. You know, I'm always having issues with these mics. I want to welcome everybody to this market review. Hopefully everybody can hear me now. This July 11th, 2026. I wanted to do a quick market review before I go watch this World Cup. Before we start, let's check out this coming week's news events. Looks like on Tuesday the 14th we have CPI at 8:30. We have the Fed chair is testifying at 10 o'clock. We have on Wednesday PPI at 8:30. And Fed chair is testifying again at 10. And then on Thursday and Friday, those are probably, low impact news events. So our two most important days of the week is going to be Tuesday, July 14th and Wednesday, July 15th. All right. So I wanted to do a top-down analysis, labeling important levels, how I do it. I know some of the guys in my group chat I've been calling price, while I enter the market. So as you can see, we've been bullish. We're on a monthly time frame, and we have this monthly gap right here. And I will also let's label this. This is NQ, by the way. This is June's high. And then we have, this is June's low. I'm not going to mark it because I already have a gap here. I also like to mark out the 50% of weekly, daily, monthly range. Looks like we mitigated that right here. 50%. My color is orange. We have that. That's all I have for the monthly levels. Let's go on to weekly. Let me see. Let's align this properly. Right there. All right, we have, this is this past week's low right here. And we have this past week's high right here. Now, we've been on a weekly consolidation, as you can see right here. It's just back and forth the past few weeks, back and forth, back and forth. I expect it to continue to do so unless we break this high right here or these lows into this monthly gap in here. So that's that. And then we also have this past week's 50% right here. We have that. Make that blue. Oh, and there's something that I didn't notice before. This candle right here didn't have a wick. This is called the devil's mark. And usually when you have one of these, you could trade to it and from it. It always gives a explosive move. I'll show you different examples of that. And we have this week's high, and then we have these highs up here as well on the weekly time frame. Now, I don't see any gaps, any daily gaps. We have this. This has been mitigated. Nothing until here. And I see like a volume imbalance that's not completely filled up here. Let's see if it's on a weekly time frame. No, it's on a daily time frame. This imbalance right here, it's not completely filled, so I'll mark that. We could expand into it. And I think, let's see. All right, this should go into August. I like to keep the monthly, right, well, the 31st. I'll keep the monthly levels until the month ends, and then the weekly levels to the days. I'm sorry, for the weekly each week, and then the daily levels I move around as we mitigate them every day. So our weekly goes to Friday the 17th. Right there. Okay. Oh, we have our first gap. We have a gap right here. It's a daily gap right there. So we're really bullish, and we're in a weekly consolidation. So I'd want to see if we want to come down. Let me look at the weekly. No, nothing. Daily. We just closed above this order block, so we could come back down. Probably not all the way to here. At least not yet. Probably because it looks like we're trying to push up. Take these highs here. We have this daily high up here. Yeah, we have this daily high here. So on a 4-hour, yeah, we could come down. Actually, early next week with our calendar, we have CPI on Tuesday and PPI on Wednesday. So we could use those news as momentum to either come back down here or to push up and take some of these highs. We'll just have to wait and see. Looks like the market wants to continue going up. As of right now, let me do my standard deviations. Fix my lines here. Tuesday, July. Well, this is this past week. I think this, yeah, okay. Okay, so we have 2 standard deviation of this move is right at this daily high. So this would be a target for sure. Let's see, let me stretch out, see what have we mitigated. Okay, so we hit 1 standard deviation back down. Yeah. Yeah, it looks like we probably may not come up here, come back down here early because we're expanding. We have this 1 hour gap right here that could be used to push up. We have an order block here, 1 hour. We have, oh, forget that. We have a 4 hour gap right here. This should hold price. If we are to stay bullish, this 4 hour gap should hold price. We have a order block here, a 4 hour order block, and a 4 hour gap. So this should hold price, and we should be looking for these highs right here. And of course, we had this devil's mark, as you can see here. This is on the lower time frame. Same devil's mark. I think it was on the weekly. Yeah, it was here, a little small wick on the weekly, but as you can see, when we come back into it, right, we explode up. Even on the smaller time frames, you can see right here, we have the devil's mark here on the 4 hour time frame. And you can see that explosion. So whenever I see like a higher time frame devil's mark, like 15 minutes, 1 hour or above, I like, and we're dropping, I like to take the short into it. And also I like to take longs off of it. So if you drop to like a 1 minute time frame, let's see, where are we here? Yeah, this is it here, the first one here. And you can see, I don't know what time it is. This is right inside of macro, right? Look at this, right at 10:15, right? If you can see, actually, you could take the short, right? You know, here's our macro here, 9:45, right? Where we reached the monthly level, whatever this monthly level is, and then we displace, right? And then you can see this drop right into 9:15, 10:15, right at the end of that macro, first AM macro. And then excuse me, from there you could take a long, you could do something like this. Let's see, here or here. This is the first swing, or even the last swing on this time frame is all the way up here, actually, before liquidity was taken. You could do that. We drop right here, we'll pull, we inverted these bearish gaps got inverted here. And if you want, you could wait all the way to your macro, right? We drop back into this gap right here in macro time, right? And then push up all the way to 11:15, which is right here. Nice. See if you come in here. I would probably get in right here. Where's my long tool? Yeah, but once we close above this series of down close candle, you could long here, right? And you could take it to 2 standard deviations right here. You could take partials, you know, at the end of macros, right? So Where's 11:15? 11:15 is right here. This candle right here gives you 11:15. Let's make that. So you could sell something here. Excuse me. Sell something here. Move your stop loss to break even. You know, if you want to wait to see if we can get to this 2 standard deviation. Sorry, my throat is itchy today. And the next macro starts at 11:45 right here, and you just monitor it to 12:15. 12:15 is right here. Right there. Maybe you take something else off, you know, and then you move your stops up to like right here, and then you just write it out, and your TP would have hit. Let's see. Next macro is 12:45 is right here, and it'll take you all the way till about 1 o'clock. You hit 2 standard deviations, and of course, if you want to hold till like 1:15, which would put you right here. Right here. 1:15. Be a nice little trade. For how many points would that be? Enter from here all the way. Hold on. That's 398 points total. Yeah, 398 points. Yeah, from here to here. It's about 398 points. So, I mean, you don't have to hit 398 points. If you can consistently hit 10, 20 points, even 5 points consistently, you can be very profitable. Anyway, so that's how you use devil's marks. All right. Okay. So, as I was saying, I want to see us climb up back to the daily. Climb up into this 2 standard deviation up here. So we're going to be looking for 30,014. That's the low hanging fruit for us. And probably on the weekly, let me look at the weekly. We have this wick to contend with. I don't know if we're going to do it all in one shot. Let's see, where's 50% of this wick? Okay, so we've just hit 50% of the wick. So yeah, I like to see us go push up a little bit higher. Yeah, so we're looking for higher prices. Preferably off of this 4-hour gap and these 4-hour order blocks here, series right here, to push us up. And then once we get up here, we'll just have to wait and see. Do we want to consolidate, or do we want to push up into this volume balance on the daily time frame? Yeah, because we still have, we have this part that's unfilled. Yeah, we still have this part of the daily volume imbalance to still fill, so we'll have to wait and see if we can go up there. And for, I had already done ES. We have this monthly order block here, and we have these these monthly levels here. On the weekly time frame, we have previous week's high here, previous week's low there, and I didn't do the 50% because it's kind of close when I measure it. It's really close to this weekly order block. So this is the first time on the weekly time frame that we closed above it. So I want to see us come back down to it and look for a strong reaction off of it. Now we are going to get reaction off of the wick of it. So, we want to see something like, where's my writing tool? Maybe something like, let's go on the daily time frame. Maybe something like this, I guess. Maybe take this and bounce. Something like that. And then if it wants to continue to up, then it'll do something like that. But we are close to these weekly highs, so I kind of want to see even this daily order block initially, because we closed above here and this is right here. So maybe this order block 4-hour can come in, maybe something like this. Take these highs, come back down into these order blocks right here, and then shoot up and then come back down. Maybe do something like that. Something like this. Yeah. Oh, the weekly order block is like right here. Use some type of news. So we'll just have to wait and see what happens with the news that aligns. All right. And that's that. Bitcoin. Yeah, Bitcoin, we're still kind of on a downtrend on the weekly level. Now we have this weekly gap right here that just formed. Oh, actually, we rejected off of it. We have this weekly gap here. Also, I need to, where's my weekly gap? Right there. All right, so this is what we look at. We look like on the monthly. We've just formed monthly order block right here, right? Bearish. Two monthly green candles. We just displaced below them on the monthly time frame. So we want this to hold price to see if we can roll over. If we invert this, then we're going to probably go higher. But I'm expecting, especially after we just closed below 2.5 standard deviation right here. So we're looking to drop even lower. So that'll be that. We have, yeah, we want to see this whole price. Oil. I don't know. Oil on the monthly time frame, we're just kind of just consolidating right now. We took this liquidity back into this consolidation. I'm still bullish, but we do have all these liquidity right here that we can take out. It's a possibility, but we closed above 2.5 standard deviation on the monthly time frame. So any retracement lower, um, I'm only looking at to either take these sell sides right here. Here, let me remove some of these lines here. Yeah, this sell side right here. Maybe if it's really ambitious, this sell side here, but I don't think oil is going to drop that low. So we're looking to come in here. We have this buy side liquidity at 160. Let's see, where's my buy side? Yeah, that's my buy side. We have this minor sell side here. Two minor sell sides. Yeah, so yeah, this just tells me, if we dip below this monthly fair value gap right here, then we could come back and take some of these lows here, but only to go up. So we'll just need some more news from Mr. Trump to help, bring that into fruition. And I think that's it. What else could I look at? Let's look at, let's move this out of the way. Let's take this out. Same thing for Ethereum. We have these lows here. Ethereum is kind of saying something different. We didn't close above 2.5 standard deviations, and we're doing a deep retracement. So it's possible that we can come and take out this sell side liquidity right here and to begin to move up. And then we also have these two relatively equal lows right here. Yeah, we could just come and take this out, dip into this monthly gap again, and then start the displacement up. Yeah, because we don't have that much liquidity. All we have is this liquidity and this liquidity right here. So these will be taken out right here. I don't see it really going below here. Yeah, I don't see that, but we'll have to wait and see. All right. I think that's it, guys. Let's look at the DXY. DXY looks bearish. Haven't looked at this in a long time. We've taken a ton of liquidity. Where's the swing? We don't have a monthly swing. A ton of liquidity. Yeah, we took all this liquidity here. Let me go to the yearly and take a look. Okay, that's this. All right. On the yearly, came down here, took this liquidity, went up, came back down, took that liquidity from this low to this high. So went to 1 standard deviation. We're rejecting. You probably could come back down to 50% of the range, which would align with 2 standard deviations from this high right here. Just below it. Let's look at the monthly, see if anything. Where's my 3 months actually? Quarterly. Let's see, we have this is a yearly gap right here. We're still respecting this yearly gap. We're inside a 3-month gap here. So if we respect this yearly gap, we'll continue and take these highs. But if we disrespect it, maybe on a 6-month or 3-month time frame, which we actually did right here, and now we've closed above. Let me look at the 6-month. Yeah, we have a 6-month order block here. So we're still not out of the woods. We also have a 6-month gap right here, so we can come here and maybe take these lows here. Yeah, I like to see DX drop a little bit lower. 2 standard deviation is right here, and what do you know? We have a devil's mark right here. That would be a perfect catalyst to push price up aggressively. Where's my devil's mark? All right, make that a little thicker. Yeah, so we'll just have to wait and see what happens. But for right now, I'm bearish. As long as we respect this order block here, it looks bearish to me. If we disrespect it, then we'd be looking for higher prices. All right, anyway, that's all I have for you guys. Good luck with the incoming week. Don't be a degenerate. I'll catch y'all later. Peace.